Good morning, Scott Redler, T3 Live. Welcome to Friday's morning call, the nice relaxed one. So a lot went on last night. I think a lot of people aren't even talking about the China numbers, which were very soft, which I'm sure the media will obsess over at some point, but perhaps not today. Also, overnight, I think they took off the table that you're going to get the 27 nations coming together in a major treaty because Cameron was like, sorry, dude, I don't want to have anything to do with this whole mess. Anyway, so they're back to the 17 nations to see whether or not they can come up with a fiscal plan and then really how to enforce it, because they always had a fiscal and monetary plan, but they let it go for too many years because no one knew how to deal with it, whether or not countries broke their rules or had too big of a debt to equity ratio. But anyway, with that said, technically the market broke that upper range yesterday. A lot of people had to get out of their excessive longs who were playing for a move to the upside, including me. And now, this morning the futures are up about 10 handles. Now we're up a little less. We want to see what type of action we get to today to see whether yesterday was really important, if it leads to further downside into further support, or how much could it take back. So if you look here at the chart of the S&P, you will see like this was the mini break of this upper end. I talked about how we were trying to situate and get ready for a move to the upside, which didn't happen. Okay, so basically this small uptrend broke. This level wound up, breaking a bit to the downside, taking momentum out of the tape. So now the question is, what's next? So, I would say this morning we were right back here. Okay, this was just a retest of this broken area. And at first, I know guys that were in early started to get short up there, like 125.20, 125.40, and so far, we're fading already. So if the market starts to fade and we start to get into yesterday's low, if we break below the low here, of yesterday, we go negative, then what you want to do is you want to put those retracement rules up. So I'll do that quickly for you. I sent it out and off the charts last night. Basically these retracement rules to look at would be one, right around here, which was the low. That's that 38.2, and then really no, actually that's 1227. So 1227 is an area to write down. That would also keep things intact. Keep the top third of this huge wide range bar from that Wednesday news, and then even the 50% mark, which is a lot lower, is about 1215. So write down 1227, 1215 if we break below yesterday's low, and then if you're looking to see what kind of bounce we get, this 1242, which is where we broke yesterday, that 25% retracement. People already shorted that pre-market, and probably if we try and get there again, it'll be interesting. I think a close above maybe this area or a little bit above 1250 would then put would negate a little bit of this move and then get a more neutral versus neutral to negative, because right now I'm neutral to negative versus the last few days I've been neutral to positive. So if you also look back here, you'll see that a few times when we've had a potent day like this, like remember this potent down day, it then gave you an inside day before rolling over. Here you had 2 days in a row and then it slowly regrouped. So that's why yesterday, with it being day one, it was hard just to buy into day one, because also when this broke here to the downside, you had 1, 2, 3, 4, 5 days. So this is why you get out of the way and you try and figure it out. If again, you're in this for this macro pattern, you're in this for the longer term, you probably did nothing yesterday, because all this was 1 day, and could lead to a move to here and then a move back up through, and then eventually at some point get going again. Or who knows, if something miraculous happens over the weekend, I don't know what that could be, but I guess the market could interpret it whichever way it wants. I've seen crazier things. But anyway, the prudent trader pretty much went somewhat flat. And the same way I said, guys like, oh, we should get short because we closed on the dead lows. In a headline-driven tape, you might not want to take on that kind of risk either. So anyway, there will be a few key stocks to watch. Yesterday, Apple was really strong. It came in at the end of the day. It's up like $2. See if that could hold. If you look at the chart of Apple, it was flagging also. It tried to be strong yesterday. If we had a strong tape, it did seem like it wanted to go. It was upgraded again. Here is where it held the 200-day. This was one nice buy area when it broke this descending channel to the upside. But coming back into this resistance, it created a tough tape. So it'll be interesting to see, if it could continue to go sideways. If we do get stronger today, perhaps, it breaks above this area. But I do think that some guys are going to try and fade it in front of the highs. So if you want to short it versus the highs, that's a strategy. And then, if we see some intraday relative strength, perhaps, this could help lead the way a bit. As far as like Google, not that compelling. It's up a dollar or so. This too, started to break below this upper support. 618 was that last breakout. It started to come below. See if it could hold up and stay around here. Maybe watch stocks like an IBM that came under some pressure yesterday. Intel. So these are the things that you could watch to see whether or not these things could hold up. If these things start going red before the market, you'll know that we are that weak. The banks had a nice tradable move for a week. Goldman Sachs went from I think 90 to 105, and then yesterday got pretty beat up. Bank of America went from I can't even talk about Bank of America, but J.P. Morgan went from the low 30s to the mid 30s. So it seems as if that could have been we talked about that probably 70% of the trade, might have been a little bit more. So if you look at something like Goldman Sachs, it's up a dollar today. See now, after this nice methodical move from here all the way back into resistance, if this support level could continue to hold. So if you want to use a gauge for the banks, what I would say is, yesterday it would have been nice to see if it held 102, that last bull flag breakout that we actually did pretty well with a few days back. And now see if we could hold this area. This area right now is 99. So now, for me, I would say, watch this. This will be very interesting, okay? Can we hold this upper level from this move, or does it break below this 99 and give us more of a retracement, which would give more of a sell-off in the other banks, and then potentially, a sell-off in the futures? Remember the last time we were watching, after this big move, came into here, and I'm like, let's watch this 102. If it breaks this area, chances are, the rally is going to come under pressure, and the downside could get going. And, that happened. And if you put that with the spiders, that correlated to this move lower. So I would say use Goldman as a gauge this time. It's really around 99. So it's up a dollar. See if it could take back a little bit more of yesterday. It was down like 5, and use that as a gauge. OAHs, really weaker lately. If you look at the spiders, which I showed you guys yesterday, are not even in the gap yet. That gap from Wednesday starts at 123.22, okay? And we're not even there yet. That's why I also showed you how, this could, just have been a day to really shake things up. But at this point, for the macro guy, we're not even in that gap yet. So there's still some room here, again, which is why I took some stuff off just in case they want to shake the tree and bring it down to even the middle of the gap, which would be interesting to see if it's viable. So that's around 122. And I showed you that in the S&P. So, right down this morning, 123.22. If we break below Friday's low and go negative, that'll be one area to watch. That's the gap. If it goes into the gap, the question is how much of it does it fill? So that 122.19 is something I'm going to be watching. But back to why I showed this is because a lot of indices, a lot of stocks have this open gap from that Wednesday. Okay, spiders aren't in there. OAHs already, through there. So at this point, I've been drawing this macro inverted head and shoulders pattern, which is still intact because here's the right shoulder. You still have room back to here, but short term, it already filled the gap where other indices didn't. So it's a little relatively weaker than the rest of the group right now. But that could always change. But I'm just pointing that out because you look at even the XLI, which are the industrials, and it too is trading more in line with the spiders, so it's showing a bit more relative strength because it also is not in the gap where I just showed you the OH is already in there. If you look at, I guess, XHB real quick, the home builders, my goodness, I can't believe, I guess this is the new leader considering this gap is here. So the home builders are actually, acting very strong. So there are ways to measure how to do the trade moving forward. And right now it seems as if the oil service group, because of maybe the news with Halliburton and some of the other ones have been under pressure. So there's other more relative better areas to be in because, again, you could trade it or watch it versus that gap. And then see if the spiders do get there, what you could short that could intensify or what's holding up. So with that said, the futures are up a little bit. There's going to be headlines galore all day long. I think one of the negative headlines is they capped the bond buying, by the ECB. Another one was that Some people thought that perhaps all 27 nations would come together as a unified Europe. I believe that's off the table. So the last, grasping for the straws is that the 17 nations could come up with some kind of fiscal plan, but then still they have to take it back, get it ratified, and that could be months from now. So it's going to be interesting. Just again, know your time frame, know what you're looking to get out. It's been a choppy week, so a lot of guys got hurt. Some, were able to survive. There was also some short-term active money to be made, and just know where you fall within that and see what you could do to put yourself in a better position going into the weekend. We'll be on the radio, we'll be on the chat, we'll try and help guide you through it. So make sure to tune in because every day there's stuff that goes on intraday, and 1,000 eyeballs are better than your 2 at home if you're not listening and looking at the chat and looking at the positions, because they are helpful to give conviction and also give some confidence. So with all that said, happy Friday. I'll see you at the recap. There will be a recap today, and just keep it tight and listen up. Have a good morning.